is a question of July 2008. Just the Realtor City Market store, selling curios of all descriptions. Most of her sales are for cash. Although regular customers are always or allowed credit. No double entry accounting records have been kept, but the following information is available. Net asset summary. So we have the summary of the assets that she maintains. Then we also have the additional information. Joyce Njeri bought a new motor van in January 2000. So this date, 1st March 1999. I think that's the beginning of the period. Then the period runs up to 1st April 99 is the beginning, isn't it? 31st March is the end of the previous year. Then you look at the notes, additional information number 1, 2, 3, 4. Then number 5. Then there is a summary of bank statement for the 12 months. You see the credits and the debits. Then there is interest for the bank for the 6 months to March 2000. Yeah, so March 99 is the end of the previous year. So those balance in March 99, they're the balance brought down in 1st April 1999, the beginning of the year. Then the year runs up to that is 31st March 2009. So you are required to use this trading profit and loss account for the year ended 31st March 2000 and a balance sheet as at that date. So this was in 2000, in the 1999 2000. So those years, they were later profit and loss account. It's the same thing, it's the income statement. Then, that is the information that you have. And you need to do what? To prepare the financial statement. So what you're going to do, you start with what? Workings. Working number 1, we're going to start with a cash book. Then our cash book will be a 2-column cash book. This is debit side, this is credit side. So you have a balance. Where do you get this balance brought down? Look at the assets, net asset summary as at 31st March 1999. You will get what? Cash in hand, na cash at the bank. Can you see it? Yeah, 55 and 2800. So, what other information do you have? Cash. Joyce Njeri has taken note number 2. Has taken 50,000 per week for her personal use. She also estimates that petrol for the van paid in cash averages 10,000 per week. That is the first thing that you can get to draw. So here our figures are in shillings, 1,000, shillings, 1,000, shillings, 1,000, shillings, 1,000. So our drawings, it is 2,600. You get what? This one was in cash, 2,600. There is also petrol, 52 times 10,000. You get 520. Then other items paid in cash. You can see them at number 3. Sundry expenses. Sundry expenses. What else? These are 24. Then repairs, canopy. What is canopy? The SJD makes a gross profit. That one we are going to use it when we are going to do the profit and loss. And she is certain that no goods have been stolen, but remembers that when her friend Anne one day was getting married, she gave her a wedding gift of curious worth 100,000 earlier in the year. She had presented curious worth 200 to her mother to be sold at her brother's anniversary feast. Those stories. But in complete records, they have a lot of stories. You're looking for any cash that was received or paid. Trade creditors and trade debtors, that one we're going to look at. There is a summary of bank statement. Look at the credits. Cash banked. How do we deal with this in cash book? A contra entry. 75, 21. And then there is cash banked. Banked cash. 75, 21. So cash may reduce, bank may increase. Then dividend income 1500 by bank. Then there is 210. 1500 checks. Yeah, there is checks. Checks banked. Then we have dividends. It's 210. Then what else? This debits, those are payments. There is purchase of a motor van by bank, 3,200. There is road fund license, 80. Insurance, $323. Payables, 7,777. There is rent, 970. Sundry, 31. It's accounting work. Also, we are being paid. 75. Bank interest. There below, you can see a note on bank interest, which was 20. Then there is bank overdraft interest is 20. Then interest amounting to 27 on bank overdraft for 6 months ended 31st March was debited in the bank statement one. That one we're going to treat it when it comes to the income statement. There is a returned check of 29. Then a balance added down. My totals here was 12,505. 12,505. My totals for cash is 10,905. 10,905. Then balance for cash 39, and the bank has an overdraft. When you see a balance for the bank is on this side, you say it's an overdraft. You have paid more than you have, and so you have the overdraft interest. Confirm that total. That is working number one. Working number two. We now have the actual balance of cash in the bank at at the end of 2000. Then, now we want to know the sales and purchases. Hauwezi fanya income statement bila sales and purchases. So for the sales, let's have trade receivables or debtors control accounts. Trade receivables control account. Control, no, it's an account. So it is like that. This one will be able to give us a total sales. Do you have the balance of debtors at the beginning of the year? Look at the net asset summary at 31st March 1999. Debtors, can you see it? Yes. Our figures here are in thousands. Tumeona 170. And then what is the balance carried down? Have you seen 320? Trade debtors, not number 5. Trade debtors and creditors at 31st March 2000 are, can you see it? 320. Then we have the checks that were received from the debtors. Okay? The checks that were received from the debtors. So this is checks received. Ama, in other words, why the cash book yako? You have this 1500. Where is it? 1500 double entry yake. Ilienda wapi? Kwa debtors. Okay? So it is here 1500. So the difference will be credit sales. That is the balancing figure will be there. Credit sales. So this one is 1820. 1820. So our credit sales here will be 1650. Then now to get purchases, we do what? The trade payables. Control. Trade payables control. Do it like this. Can you see the balance of the creditors at the beginning of the period? It's 230. It's there. At the end of the period, number 5. Then there is the bank, 7777. So the difference will be what? The credit purchases. So this one is 8 at 10. This one is 8 at 10. So this one will be the credit purchases, which is the balancing figure, 77, 80. That is working number 2 and working number 3. Now, we have been able to identify purchases. Something that we don't have when we need it is closing inventory. Closing inventory. Closing inventory. How do you get it? You get it like this. We have sales. Our sales, it is in shillings dollar. Okay? So our sales, kuna 10,850. Can you know where you get this figure? Yes. Plus 1650. That is our sales, which is 100%. And it is what? You add those two figures, you get 12,500. Then, our gross profit margin is how much? 40%. 40% of this is the gross profit, which is 5,000. So if you less here, what you will get is what? The cost of goods sold, or cost of sales. Okay? Which is 7,500, and it is 60%. That is the cost of sales. We still don't have the closing inventory. But we have what? Opening inventory. It's how much? From the first statement in 1999, you can see it's 500. Okay? Then purchases. Our purchases is working 3, which is 7,600. Okay? You add this, you get what? 81. Then this 81, you less what? Cost of goods sold, which is 7,500. So here, what do you get? It is the closing inventory. You have now got our closing inventory here. Okay? That is our working number 4. Our next working, we're going to work on motor van. I think it is not number 1. You can say that the bank statement shows that cash paid for the new van, was shillings 3,200,000. It's not very important. Higher. Then you have seen that in the cash flow, isn't it? Since this was part exchange, just give the examiner that statement. Since there was part exchange, of on the old van, the costs of the new van must be we have such cases. If you have an old vehicle and you want a new one, you take this old vehicle to the dealers. They take the old vehicle, they give you a new vehicle, then you add some money. That is called what? Trade in. Then, first year depreciation is 20% of costs, which is 1 million. That is the depreciation. Then we need another working here, working 6, disposal of the old van. You have done a topic on end year adjustments, where you can see the disposal of a van, how we deal with it. If you look at the beginning of the question, that is the cost of van, 3 million. Then we have provision for depreciation for that one. How much? 2,500,000. Can you see it? Yeah. Then what else? There is the trade-in value. Trade-in value. The new one. This one. 1,800. Okay? So the difference will be the profit. Kama difference ingekuja huku ingekuwa loss. Profit on disposal. That is 1,300. This is 4,300. 4,300. Iko sawa? Yeah. Goods taken. As with the drawers. On account of profit. So we have, these are goods in how much? Number 4. This Jenny makes a gross profit of 40% on selling prices. She is certain that no goods have been stolen, but remembers that when her friend Anne was getting married, she gave her a wedding gift of curios worth 100,000 earlier in the year, and she had presented curios worth 200,000 to her mother to be sold at her brother's anniversary feast fundraiser. But these figures are stated at selling price. So these figures are stated at selling price. You put a statement like this. So our selling price, which is 100%, is in 300. 200 plus 100. 300. Okay? Then, gross profit is 40%. Sorry, 40%. 40% of 300 is what? That was the gross profit. So it means the costs of these goods is how much? Yes? 40. Selling price minus the gross profit to get the costs. Okay? Yeah. Therefore, purchases taken to the trading account mingapi is equals to purchases zenye tuliona kwa purchase ledger control account Sawa? It's called literally trade payables, control accounts, return purchases, ledger control. Tulipata ngapi? 77. You add what? This one. Okay? Goods taken. Add goods taken, which is 180. So this one will be what? 7600. The last thing that we need to account for is drawings. How can we define drawings? It could be either cash or goods that were taken for personal use. In case of goods taken for personal use, you treat it in the trading account, less from the figure of purchases. If it is cash, you put it in a drawings account, then it will be used to reduce what? The capital. Can you see cash drawings? 50 per week times 52 weeks. 2600. We have inventory working three. The ones that were taken for personal use is around 80. Can you see it? I repair friends. A wedding. Yeah. Then, either repair mama yake waliuza. You have treated it as sales. Then there is dividends. This dividend, it was taken. It was not taken, it was an income here. Dividend of 210. So the difference here will be capital. Why do you put dividends here? Because we don't have any investments in the business. What is dividend, first of all? Dividends, it is from investments, income from investments. When you invest in shares of a company, then you earn interest. But now, in the balances that we have been given, we have not seen anywhere where the company or the business has invested, isn't it? So it means this dividend, it is not meant for the business. It is personal dividend. And since just there is a sole trader, sole traders are able to separate business incomes now, personal incomes. Sometimes what are the mix. But us as accountants, we have what? We need to separate them. To me, which concept? Business entity concept. So we can also indicate here, since there are no investments in the business, statement of financial position, the dividend income must be separate from the business. So there. That is how I put it here. Okay? However, since it is paid into the business bank account, it should be accounted for as